We are back with the midday wrap up. Very special guest joining us live, Speculator Seth. Seth, how are you?
Good. How are you guys today?
Pretty good, man. I woke up and I was like, what the heck happened?
I know, right? In terms of the election, I have some other stuff to show you, but we do have to talk about the election a little bit. I'm
A little
planning
bit,
on
yeah.
making a video that will be a little bit more into like what the impacts of the election are going to be. But I've been one of those people that I've felt very strongly that Donald Trump would win for a long time. I mean, all of the data that we're getting in
Yeah.
was saying that he was going to win, and the candidates he was running against just didn't run a very good campaign. But I did not expect Republicans to come out of this with a 55 vote majority in Congress. That's huge. That turns this into, possibly one of the most significant political changes in the United States of the century. I mean, that's a really big deal. Republicans are probably going to be able to do a lot with that.
Yeah, I mean the Senate's flipped, right? So I think the jury's still out a little bit on the House of Representatives side, but
Hmm.
yeah, I mean when I woke up this morning, I'm like, all right, every market that's important to us is just breaking either up or breaking either down. I mean, big moves.
Yeah, yeah. Well, just think back to, Trump's first term. Anytime that they wanted to do something, there was always this thing like Mitt Romney would come out and be like, I don't support that. And then they didn't actually have enough votes in the
Mm-hmm.
Senate to make it happen, right? Well, okay, first of all, Mitt Romney's not in there anymore. He retired. And then, you have to get five Republicans to cross over to stop it. So it really is a big shift.
Yeah, no, the Senate is it's a beautiful, as Robert Caro would say, who wrote a four-part biography of Lyndon B. Johnson. One of the books is called Master of the Senate, and he explains how what genius the Senate is. With 2 years, every 2 years, a third of the body is up for reelection, 6 year terms, and how it creates a beautiful armor against mob rule and impulses. So, and I think that's still true even with the parties being the same. So it should be an interesting time going into next year.
Yeah, for sure. You know what? I could totally run with that, but I think you guys want to see the indicators, so I should probably leave it there.
Yeah,
So
all right.
I want to show you guys something that I've been working on for a long time that I'm really excited and I'm super interested. So you know, anytime that you're talking about like a technical setup, something that's kind of systematic, you have to deal with the issue that the market can only, provide so much edge for a particular thing. If you look at Renaissance technologies, they talk about how they limit the size of the fund because if the fund gets too big, the impact of their trades is too much and the edge in it disappears. Similarly, you'll notice that there are some technical strategies that worked in the past and they start to cease working. So if you're in that systematic world, it's kind of a little bit silly to expect that you're going to go and take some strategy off the shelf that's put online and expect to make money from it. Because if it really worked, then everybody would be using it and the edge would already be taken out of it. So we need to go and we need to find an edge like that on our own that other people haven't found. And one of the places that we can do that is with order flow. Not everybody has order flow. It's a much more complicated thing. And so that's a place where we know that a lot of algorithmic
Yeah.
trading firms kind of use these things. Maybe we can go and find an edge. Well, but there's a lot of problems with doing this sort of analysis with order flow because, you know, depth of market, you don't have historical depth of market information. I'm sure there are some places where you can maybe buy it, but it's not something that's typically available. You're getting it there live, but then, once you close things down, it's not there anymore. And so, one of the things that I've been working on is creating indicators that are allowing you to kind of filter and do some analysis of the order flow on the market and cache that data so that you can then, after you've had it on your indicator for several months, you can go and you can build up a strategy and back test it and see how the strategy actually performs. So it took a little bit of work. There's a lot of, I tell you what, there's a lot of little pitfalls in there to get this to work, but I got
Well,
something working. So
yeah,
go
what
ahead, Jim.
what you're describing isn't a little bit of work. It sounds like a lot of
Yeah,
bit of work.
it's a lot of bit of work. The end solution is actually quite elegant, but getting to that solution was very difficult. So that's what you're seeing here on this chart. We have a chart of the 10-year Treasury, and I have a bunch of my indicators on it. There's two on here that aren't mine. This top one is cumulative delta, and this bottom one is R squared on cumulative delta. So if you guys don't use R squared, you might be one to take a look at, because this is basically saying, is this data series like auto correlated? So R squared on price is pretty interesting in and of itself, but R squared on cumulative delta can also give you very, very good signals. When you start to, when you get this, that means it's really trending, right? Um,
So it's but you're looking for you have a line, and I can't see it very well because I don't have my glasses on. But on that
hmm.
bottom panel there, it looks like it's almost like an overbought line, right?
Well, what it's saying, when it's saying down here, it's saying that there's not a whole lot of trend in orders, like whether they're buying or selling. And up here, they're saying there's a lot of trend, that like everybody's buying or everybody's selling, and that there's really
Okay.
some strong trend going on. So I've done some back tests with this that suggest that this is can be a good signal. But these are these new indicators, and man, I got like what, one, two, three, four on here, and it's a pretty complicated thing, and I don't necessarily want to go into what each one of those are doing. This too much. This one is just showing you the overall level two activity, or market depth activity. This one is showing you the imbalance between the bids and the offers. This one is showing you really large bids or offers, and this one is kind of a rolling imbalance. Like, are they mostly buying or mostly selling over the last 10 minutes or the last 30 minutes? Okay. So we have all of these, and you can see they backtest. So if I actually, or sorry, they cache. So if I actually scroll back here a little bit, you can get to where I last closed down. I had things open all night, but you can see there's this gap here. That's when I didn't have the chart open, right? So while
Okay.
they're open, it does all of that processing, and then it saves that stuff to files, so that I can go back several days later and still see what it was. And once I've had all of that data cached, and so I've had some of these sitting on a chart for quite some time, then you can go and you can do a backtest. So an interesting backtest that I did here is just this one with market imbalance. So I made a strategy that basically says, if there's 60% buying over the last 30 minutes and I buy, what happens? Right. And we get this. Now, at first, you might say, oh, well, it's red, so maybe I'm not really all that interested in this strategy. But the thing that's interesting about this one that I find really curious is, at the beginning of the strategy, we're going down. And then the second half of the strategy, we're going up. What's
Hmm.
with that? Well, the interesting thing is this spot right here. Any guess as to what might have happened there that might change things?
There might have been an event, maybe.
Maybe. That's a good guess. That's actually when the contract rolled over.
Oh,
So,
okay. Okay.
so what this is suggesting is that order flow signals, that theory, obviously, we only have a few months of data. We would like to, do this for years. That will take me some time to collect that data. But the theory is, and we've kind of seen this in our own trading, and we've talked a lot about this on my live stream. So this is kind of supporting evidence to this theory. Order flow indications work better at the beginning of the contract and kind of become contrarian indicators towards the end of a contract. So
Interesting.
there's something that could really be beneficial to your trading, especially if you're trying to trade with order flow and the DOM, that we have some supporting evidence from with this backtest.
So is this a function of rollover completely then?
I think so. My theory is that when people enter into a position, they tend to use more market orders. They tend to be a little bit less specific about what price that they want. But then when they're taking profits, they really care about those things. They want to use a limit order. They really care about, I want to make $500 on this trade instead of
Yeah.
400 and whatever, right? And so they change, they're a little bit more stingy.
Yeah.
And so my thinking is, well, maybe it's when people are starting to close out those positions coming into the end of the contract. Maybe that's why order flow indications kind of acted differently.
Yeah, it's interesting. CME posts this, they call it pace of the roll, and they have these
Hmm.
charts for every market, and it's a graph. It just shows you how quickly folks are rolling over positions, and it's over days, right? It's
Yeah,
not over
yeah,
minutes. And so it's kind of an interesting chart. And sometimes that pace happens fast, sometimes it doesn't. It happens slow.
yeah. And in this one, it seems to me that it's like that whole month of the roll. So I'm thinking, for instance, right now the order flow indications are still pretty good and there's a lot going on. But like come December, then I'm going to be a little bit more cautious and maybe I'm more looking for mean reversion trades with order flow and things like that. That's my current plan, or at least
Yeah.
that's what this particular data set says. But again, it's not a ton of data, but it's a theory that we've kind of been playing with for a long time. So seeing some data coming out to support that is really encouraging.
Yeah, and you'll get more confirmation as you go forward, right? As you get more data that's accumulating in the cash, and then you'll be able to see that picture
Exactly.
unfolding, hopefully again.
Yeah. Yes. And the data that we're collecting here, it really is the lot of complicated stuff. There's all sorts of interesting things that go on. Just as an example, these are this is basically showing you like when big orders start showing up. Like this is actually possibly an indication of like is spoofing going on. So, one theory that I have is that it seems to me that when you do get a lot of spoofing, like right there, tends to be where there are like big changes, right?
Hmm.
I've never been able to say like we get to that point, that means that it's going to reverse. It's like, no, it might reverse or it might go higher, but something is going to change, right? So these can actually give you like really, really interesting signals that you wouldn't see otherwise. But it's just the problem is like it's such a complicated thing. And before you were only able to see this stuff from looking at the DOM and just build your memory and maybe your brain figures it out and builds a good intuition of what tends to happen and maybe it doesn't, but with the actual data we can actually go back and test our theories and actually come up with something that's actually effective.
Yeah, it's interesting. And then since it's kind of new, right? This is kind of a new thing. Um, you're going to draw more and more conclusions as time goes on, as more data comes in here. You're going to make more observations that are true time and time again because of the data.
Yep, yep. Because I've found that if I do a back test over a year, usually if I kind of like curve fit the parameters of the strategy, I can usually get the strategy to come out as profitable. But if I want to do it for like 5 years, which I mean, 5 years seems like such a long ways away, but to me that does, things go so quickly. This last administration goes so quickly. So 5 years, we'll have 5 years of data in no time, and then we can draw some conclusions. But getting like a day trading strategy that is consistently profitable over a 5 year time period, almost impossible. It's so hard to find them, right? But the idea is you're going to be more likely to find that in a place where there's less competition. It's kind of like if you're panning for gold, you're not going to go down to the river where everybody else is already panned for gold,
Yeah.
right? It's already going to be mined out. You got to go and find a new place that nobody's been and do new research and learn and discover things that nobody else knows yet. And that's what my indicators are designed to do. It's not there to, you know, do a particular strategy that I think you should pursue or anything. I'm giving you the tools to do all of the analysis yourself and discover something that other people haven't discovered.
Yeah, I mean, you're right. Everybody has a pivot, daily pivots. They have Fibonacci. They have, all, Bollinger Bands, all the regular suspects, right, on a chart. And some folks will be like, all right, I'm gonna change the standard settings for this indicator to give me a unique picture, and maybe
Mm,
that gives me an edge, right? And then you find
right.
out, well, Mike Burke's been doing that the whole time. So, how many other people have been doing that the whole time?
Yeah.
So this is completely different, though. This is completely unique.
Yep. On that point, something that I always come back to is what they call the quant quake. So back in 2018, there was this period, and man, I still remember trading it because it was like the liquidity in the treasuries just disappeared. We went from like 3,000 contracts usually on there to like only a few hundred contracts per price, and everything was just going everywhere.
Yeah.
And there was a huge volatility spike. I think many traders from back then might remember when that happened. And one of the things that happened during that time was there was a lot of quant trading firms, and they were doing generative algorithms, which is they would have some sort of an algorithm, and then at night they would go and do as many variations of that algorithm as they possibly could, changing all of the things like the parameters and different thresholds for in entry and all of this sort of a thing to try and
Hmm.
determine what's the technical strategy that will work the best. And it kind of worked for a while, and then that quant quake happened, and all of those firms went out of business and they never really came back. So
Yeah.
it was like, oh, if you think that you're going to find an edge just from putting indicators on a chart, and I'm not saying that indicators are useless, okay? Otherwise, I wouldn't use NinjaTrader, okay? Indicators are
Yeah.
extremely useful, but your edge is usually going to have to come from some sort of understanding of the market too. And why is that? Because there are literally robots that can go out there and try every possible combination and iteration of things to test it. And if it works, then they've already taken it out of the market probably, right? So,
Right. That creates efficiency right there, right? So
right.
that efficiency kicks in, and then it just normalizes price.
Yeah. And it always, and this is the bigger one of the bigger things that I talk about on my channel. The market is extremely statistically efficient, but it is not very informationally efficient. Okay. So we come out here on the election day today, and everybody says, well, the market knew that Donald Trump was going to win. So shouldn't that mean that everything should already be priced in? And yet then we find out as it becomes more likely that Donald Trump's going to win, and we get this big huge thing that I got on my chart where the treasuries just sold off like crazy. How does that happen if everything's priced in? Well, the reality is that the markets are not very informationally efficient at all. It's just people buying and selling, and it has a really strong effect, and they tend to overdo it. That's why I bought a little bit of TLT today. I kind of feel like maybe treasuries are a little bit too down. I think that it might be hard to normalize interest rates, and there are some things about a Trump presidency that might make interest rates higher, but I don't know if we're going to be going to new lows in the Treasury. So I bought a little bit, and that's me kind of saying, well, the market's not informationally efficient. So
Yeah.
there's a lot of edge everywhere. The problem with an informational edge is that, the informational edges don't always work, right? It's like the market is so informationally efficient that you might totally have the edge and know the information and everything and still not get paid for it. But
Yeah.
that's the world we
Yeah,
live
no, this
in.
why I'm an old bond guy, and when I woke up this morning and the 30-year Treasury bonds were down over two handles,
Yeah.
for one quick second, I did a little Chicken Little moment. I looked up at the sky to see if it was falling. I was surprised at the order of magnitude of that move.
Yes, yes. And I remember I first started watching futures markets. I've been kind of in the trading space since 2008. That's kind of what got me into it. But I hadn't been looking at bonds or anything until 2016. And I remember
Okay.
watching the 2016, and man, the drop
Yeah.
off in bonds, that was absolutely insane. This is not quite as bad, but it's still way further than I expect. And I'm kind of sitting here like, okay, and we're going to have a Federal Reserve meeting tomorrow where they're going to cut interest rates, and we're
Yeah.
selling like this. Okay, let's see what happens.
Yeah, no, I hear you. And yeah, I started. I'm so much older than you. I was in We saw Treasury bonds in 1980 on the floor of the
Mm.
Board of Trade trading at a discount, like less than
Yes,
100.
yes, less than 100.
And I was, a brand new kid. I thought that's normal, right? Oh, this is normal. It will never go over 100.
Yeah, yeah, right.
I was wrong.
Yeah, and I always wonder if I'll ever see markets where bonds are below 100 or not. Kind of feels like
Right.
it might never happen.
Yeah, exactly. So now the paradigm is completely changed, and it's like, all right, are we more sophisticated now than we were then? No, but remember, Volcker was coming in, and all of that. Interest rates were crazy, so it was an extreme environment. And I didn't, as a brand new kid, I didn't know what that all meant, but now it's a lot different.
Well, I think it's an important thing to note here because with this election, there was a lot of really smart people that said that Donald Trump was going to lose and that Kamala, especially when that Iowa poll came out, everybody's like, oh, she's just going to run the board, right?
Mhm.
There's a lot of smart people out there that seem really awfully confident about things, but they don't actually, they're not able to predict things as well as they claim. And that's something that we should really think about. I really feel that like one of the biggest mistakes we're making in this economy today is we attribute too much predictive power to markets. Markets are wrong about things all the time.
Well, it's funny you say that. You- Hillary, when Hillary ran, all the polls were like, "There's no way she's
Yep,
winning.
yep.
This is cap, And then that night, late in that night, I was like, "Oh no, wait a second." So when I see those kind of predictions, regardless of who's doing them, I take them with a grain of salt. But when
Hmm.
I look at a marketplace, this is like thousands of people deciding
Yeah.
what price should be, right? So that's that tug of war. It's where are we going to end up? Where's price happiness going to be at the end of the day? I love looking at volume profile to kind of figure that out over the course of several days. And it's just you end up where you end up no matter what was predicted.
Yeah, yeah. Well, and I mean, there were prediction markets were right about Trump. They've been
Yeah.
saying for a while that Trump was going to win. So I guess you can stick that feather in there. But did they think that they were going to get 55 in the Senate, for instance?
Yeah.
It's just
So
there's limits to it because of the way that it works. You got to understand there are fundamental inefficiencies built into the very rules of the market that prevent the market from being a perfect reflection of all available information.
so let me ask you last question. Does it eventually catch up though?
Well, so I would say that most of the time it does, but there's no guarantee because in order for it to catch up, people have to submit the orders on it, right?
Yeah.
And so there can be situations. I mean, with the S&P 500, you look at all of the valuations are stretched, and there's all these oscillators and valuation indicators that people are looking at that they're saying like, the return for the S&P 500 over the next 10 years probably isn't going to be very good anymore and that sort of a thing. And I'm kind of partial to that. I see some problems in the economy. I think that there's going to be a little bit of turmoil in the Trump year. Some of the things they'll do will be good. Some of the things they do will be bad. And then the economy is kind of in a weird place, anyways, right? But it's just like uh, it, it's going to be all over the place. But as long as people continue to buy, it can keep going up. And
Yeah.
if everybody's putting their money into the 401k, who knows
Yeah.
what valuation, you'd have to actually get them to sell to bring it back in line. So I'd say usually it does come back in line. And sometimes there could be like some fundamental macroeconomic factor that forces it eventually. But
Yeah.
it all comes down to the orders. Something has to happen to force the orders to come and make that happen.
Yeah, I mean, and the passive investment side. I mean, I have a couple of those, and it's just let it go. We'll be fine in 5 years, in 10 years. If I make it that long, and it's that's the mentality of not only me but a lot of people.
Mhm. Yeah. Well, and I guess one last thing that I will say is that from the research that I've looked at, you don't really get like a fundamental efficiency until you start to look out to 3 to 5 years, which I think is a lot longer than people anticipate, right? They say like, oh, it's
Yeah,
overstretched, I should sell it here now. But you got to think like actually it can stay like this for 2 to 3 years until it starts to really come in. So
yeah. Well, I love the fact that you introduced the treasuries. That's one of my favorite markets. We're looking at the 10-year note, everybody, which is probably the maybe the most liquid, at least from a volume point of view, futures market we'll ever encounter.
Yep. Yeah. And if you're doing order flow stuff, oh, you should so totally start with the treasuries, because kind of like there are some empirical behaviors that are well proven in order flow, and you can see them very, very clearly in the treasury market. So I think everybody that's just starting out, they should give a little bit of time to the treasuries before graduating something else.
Yeah, no, I just had the Raven, but hang on, Mission Control, 1 second. Would you? I got another question. So, would you say though that the treasuries move because the order book is so thick in the 10-year note, right? We're talking thousands of contracts every single tick. Would you say it moves more orderly once it starts moving than
Yes.
micro Nasdaq?
So that's definitely a thing. The problem is that regardless of how much liquidity there's not enough liquidity for the people that need to transact in there. But one of the things that happens with a lot of liquidity is that there tends to be more regular flows. Like, people know that the liquidity is going to be there, and so there's all of these institutions that will regularly use that instrument to do things, and you can kind of do the analysis and kind of find those and build edges off of those.
Yeah, love that.
Yeah, we are going to get going. One quick thing I just got to note is you can buy the indicators on speculatorseth.com, and I'll be having an update coming in the next week or two. So
awesome. Yeah, if anybody has trouble finding that, just reach out to us at learn@ninjatrader.com. We'll put you together. Are you doing a lot of social media stuff, or?
Yeah, I mean, the best place to find me is my YouTube channel. I stream every morning. Okay. I'm on Twitter and all of these other places, but YouTube is the best place. And our Discord, we have like the largest free futures trading focused Discord out there. So you can always find me there.
Okay. Awesome. All right. SpeculatorSeth.com. Is that right?
Yeah.
Awesome, man. Appreciate your time this morning. Thanks for being with us. Looking forward to our next conversation.
Yeah. Thank you very much. It's always a pleasure.
The following presentation is for educational purposes only. All the symbols, trading ideas, and market commentary are for educational and demonstrational purposes only and are not recommendations or trading advice. Live sample trading occurs in a simulated environment. Past performance may not be indicative of future results. All the information and content presented is provided by NinjaTrader LLC, and the opinions expressed by all third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.